Hello everyone, it's me BMR Farooq. Welcome to Law of Money. Today we are going to understand important terms in stock market and intraday concepts. So let's start. Before we jump into trading, let's quickly understand a few important stock market terms. First is portfolio. A portfolio simply means a collection of stocks or investments you own. Think of it like a basket. Instead of putting all your money into one company, you spread it across different companies. This helps reduce risk. Next, we have blue chip stocks. These are large, well established, and financially strong companies. They have been around for years and are generally considered safer compared to smaller companies. Then there are outstanding shares. These are total number of shares a company has issued to investors. If a company issued 1 million shares, that means those are the outstanding shares. Lastly, public float. This refers to shares that are actually available for trading by the public in the stock market. Some shares are held by founders or institutions are not traded daily. So in simple words, outstanding shares are all shares issued, while public float is portion that traders can actually sell and buy. Now let us talk about a very interesting concept in trading called short selling. Normally in trading, we buy first and sell later when the price goes up. But in short selling, we do the opposite. We sell first and buy later. Let me explain the steps. Step 1. You borrow shares from your broker. Step 2. You sell those shares at the current market price. Step 3. If the price falls, you buy them back at a lower price. Step 4. You return the shares to the broker. The difference between the selling price and the buying price becomes your profit. For example, if you sell a stock at $100 and later buy it back at $90, you make a $10 profit per share. But if the price goes up instead of down, well, that's when traders start praying to the market gods. Disadvantages of intraday trading. Now let's be honest about intraday trading. While looks exciting, it also comes with some serious challenges. First, most traders actually lose money. The market moves quickly and emotions often take over. Second, it requires full-time attention. You can just place a trade and go watch a movie. The market doesn't wait for anyone. Third, it needs strong strategy and practice. Successful traders spend months or even years learning charts, patterns, and risk management. And lastly, this is mental and emotional pressure. Watching price go up and down every second can make even calm person nervous. So discipline and patience are extremely important in this case. Types of trading. There are different styles of trading depending on how long you hold a share. The first is positional trading. In this type, investors buy stocks and hold them for a week, month, or even a year. It's more relaxed and based on long term growth. The second is swing trading. Here, traders try to capture short term price movements. They usually hold stocks for a few days to a week. And the third is intraday trading. In intraday trading, both buying and selling happens within same day. Positions are closed before the market closes. Each type has its own strategy and risk levels. Advantages of intraday trading. Despite challenges, intraday trading also has some advantages. One major advantage is leverage. This allows traders to trade larger quantities with smaller amount of capital. Another benefit is traders can make more profit in both the rising and falling markets. When price rise they buy, when price falls they use short selling. Also there is no overnight risk. Since traders are closed on the same day, Trades don't worry about news or events affecting price overnight. Finally, intraday trading offers quick liquidity and fast executions means trading happens instantly. Bull and bear market trends. Now let us talk about the famous bull and bear market. A bull market means the market is moving upward and prices are rising, investors are optimistic and people are actively buying stocks expecting prices to increase. A bear market is the opposite. Prices are falling, investors may conscious or pessimistic. Many traders start selling because they accept trade prices to drop further. The bull and bears are used as symbol because of how they attack. A bull pushes its horns upward representing rising market. A bear swipes its pound downwards representing falling market. Understanding whether the market is bulling or bearish helps traders decide their strategies. Market segments. Now let us understand the different segments of stock market. The market is not just one place where everything happens. It has different sections for in different type of financial instruments. First is capital market. This is where long-term securities like stocks and bonds are traded. Most investors participate in this market when they buy company shares. Next is equity derivative market. This market deals with the futures and options. These are contracts with the value depends on price of an underlying assets like stocks or an index. Trades often use derivatives for hedge risk or for speculation. Then we have wholesale debt market. This market mainly deals with government securities and large debt instruments. Institutes and large investors usually participate here. Another important concept is IPO, initial public offering. This happens when a company offers its shares to the public for the first time. It's basically when a private company says, okay, now everyone can become our shareholder. Finally, we have primary market and secondary market. In primary market, shares are issued for the first time, like during an IPO. Investors buy directly from the company. In the secondary market, investors buy and sell shares among themselves. This is regular market trading we see every day. We had talked about IPOs clearly. This is the end of this video. We had talked about important terms in stock market and intraday concepts. Overall, stock market is the place where companies grow their funds and investors grow their money. Thank you for watching. Stay tuned for next video on Saturday 6:30 p.m.